Good morning and welcome to the Killik & Go podcast for Friday the 8th of May. It's been a big night for British politics, so we're going to attempt to look at the way the market has reacted to that and what implications we can draw from it. So the Conservatives are now on course for an effective majority, so they've won 321 seats at this time of the podcast. And the SNP have had an extraordinary night with 56 seats and a Scottish landslide. So when the first news of this shift came out with the exit poll last night at 10 o'clock, we saw a big jump in sterling. That moved 1% against the dollar. And bond yields at the open this morning were a lot lower, so representing more relative attractiveness in UK assets and sterling assets. The equity markets opened really strongly. So the FTSE 100 was up 1.5%, and the FTSE 250, the domestically oriented index, was up 3%. The big movers were the sectors that were under threat from government policy. So the house builders and agents, that was the mansion tax, particularly the London-centric names. So we've seen big moves. Foxtons up 11%, Countrywide similarly, but also the house builders. So Berkeley Group, very strong performer this morning. Bellway. So that's been probably the biggest sector reaction. Transport stocks have also been strong. So we've seen Stagecoach up strongly, and National Express. Because when that fare freeze is off the table. Financials, diversified financials, they've also been very strong. So the increase in the bank levy is off the cards at the moment. So Lloyds Bank is particularly strong this morning. But also the brokers, St James's Place, Hargreaves Lansdown, we've seen IG Group, we've seen good strength in those stocks. Utilities, clearly people were worried about Centrica. And the energy freeze that until 2016 if Labour got in. So we've seen a good bounce in Centrica, those shares up around 8% at the open. And the outsourcers have bounced a lot because Labour had resistance to that form of government outsourcing. So again, Capita, Serco, strong performance this morning. Telcos, equally another sector that has been a big beneficiary. So good performance from Colt, good performance from BT Group. Because of the support for the infrastructure bill and that roll out to extend national mobile coverage. And finally, bookmakers have been a bit stronger because of the perceived concerns over a ban on gaming machines in their betting shops. So we've seen the moves this morning. I guess the question is, do we see an extension of those share price moves? So we go back to historical precedent. And the last time we had an outright Conservative victory with a big shift from Labour to the Conservatives and a shift in what the polls were saying was in 1992 when Neil Kinnock went into the election day leading the polls, but John Major won with a majority and 336 seats. So here we can see again the best performing sectors during that period were financial services, construction and consumer goods. But what's quite interesting is you saw a big uplift in the stocks on the day of the result, but you also see continued strength in those share prices in the coming weeks following the result. So just quickly away from the UK election, the other key thing in markets this week has been quite a big rally in inflation expectations. And that's had a big effect on the bond market. So you've seen some very big moves in the European bond market, which has been affecting equity markets and driving equity markets in the absence of this UK election result. So here we can see the biggest moves in German bond yields have also been at the long end, the 30-year end, where we've seen some very significant moves in a doubling of that 30-year yield. So that's had some quite major effects on some of the prices in some of these long-dated bonds. So looking at British American Tobacco, 2% 2045, obviously a long-dated bond, that's down 15% since mid-April. So that is having an effect on the overall market. Here we've got the Vanguard long-dated ETF, which is down 9% since February. So just something to watch out for. The week ahead, relatively quiet week. Of the Killik & Co stocks, we've got Compass Group reporting. We're looking for around 5.5% organic growth in that business and around 10 basis point increase in margins. So still think that business is well on track. And here you've got Thursday and Friday in terms of the reporting procedures. So just looking at the key messages from the election result, near term, very positive for markets. Medium term, there will be referendum worries. Fiscal policy will remain tighter than if Labour had got in, with public borrowing continuing to fall. We will expect this EU referendum by the end of 2017, and the big economic implications for a British exit from the EU. So that will cause uncertainty. The S&P landslide in Scotland will raise further questions about the Union and the breakup of the Union. We'll also see further devolution of power to Scotland. And finally, interest rate policy, we expect that to be unchanged. So that's it from me. Thanks very much. Bye.